Hello traders, and welcome back to Explain the Charts. Today, on November 2nd, 2025, we're taking a deep dive into AUDUSD, a pair that finds itself at a fascinating crossroads with conflicting fundamental drivers pulling it in opposite directions. We'll break down the latest news headlines and then jump straight into the charts to see what the price action is telling us. First, let's cover the major events shaping market sentiment. The dominant theme right now is a strengthening US dollar. This is largely due to a shift in expectations for the Federal Reserve's monetary policy. Recent comments from Fed Chair Jerome Powell have been interpreted as hawkish, causing the market to significantly reduce the probability of a December interest rate cut. This has sent the US dollar index soaring to near three-month highs, putting pressure on pairs like the Aussie dollar. However, there's a major counter-narrative building for the AUD. Australia has just seen a surge in consumer and producer prices, with inflation data coming in much hotter than anticipated. This has essentially taken any near-term rate cuts from the Reserve Bank of Australia off the table, providing a strong fundamental reason to be bullish on the Aussie. Adding another layer of complexity is the news of a finalized US-China trade agreement, dubbed the Kuala Lumpur Agreement. Given Australia's heavy economic reliance on China, a de-escalation in trade tensions is typically very positive for the AUD. So we have a classic showdown, a hawkish Fed supporting the USD versus a hawkish RBA and positive trade news supporting the AUD. Now let's see how this story is reflected in the price action, starting with the daily chart. Looking at the bigger picture, AUDUSD has been in a major downtrend since its peak near 0.694 in late September of last year. The price fell dramatically, finding a bottom around the 0.60 level in April 2025 before starting a multi-month recovery and consolidation phase. This shows that while the very long-term trend has been bearish, the market has been trying to establish a base for most of this year. The price action has been characterized by significant volatility, with sharp drops and strong rallies. Let's zoom in on the last few months to get a clearer view of the current structure. In this focused view, we can see the price topped out around 0.666 in early September before pulling back. More recently, we saw a rally from the October 10th low of 0.647, which pushed all the way up to test the 0.662 level on October 29th. This rally aligns with the period where Australian inflation data started surprising to the upside, fueling bets against an RBA rate cut. Notice the candle on October 30th. It's a solid green candle, reacting positively to that news. However, the rally stalled right at that 0.662 resistance area. The last 2 days of trading for the week, October 31st and November 1st, show bearish candles, reflecting the renewed US dollar strength after the Fed's comments. This has pushed the pair back down towards the 0.6540 area, erasing a good portion of the previous week's gains. This price action perfectly illustrates the tug-of-war we discussed in the news segment. The market is struggling to choose a direction, creating a potential range between recent highs and lows. Let's switch over to the 1-hour chart to get a closer look at last week's reversal. Here we can see the sharp move up through October 28th and 29th, followed by a period of consolidation at the highs. Then, starting late on October 29th and accelerating through the end of the week, the selling pressure began. This steady decline shows the market reacting to the strengthening US dollar narrative. The price broke through several minor support levels on its way down. Currently, it appears to be trying to find some footing just above the 0.6530 level, which was a low point on October 31st. This level will be our first key area of support to watch as the new week begins. Now for a quick look at the 15-minute chart for the final hours of trading last Friday. We can see the price action was choppy but generally held within a tight range, consolidating after the sharp drop. This suggests a temporary equilibrium was found as traders squared up their positions heading into the weekend. There was no clear sign of a strong bounce or a continued sell-off in these final moments. This leaves the market coiled and ready for the next catalyst, which will likely come from the key US data releases this week. The market is waiting for either a confirmation of US economic strength or a sign of weakness that could put Fed rate cuts back on the table. Okay, let's switch back to the daily chart to recap and discuss our outlook. To summarize, we are in a period of major conflict between fundamental drivers. The key price levels to watch are critical right now. Immediate support sits around the 0.6530 area, which is the recent low. Below that, the major psychological and technical support level identified by analysts is around 0.6500. To the upside, initial resistance is at the 0.6580 level, which was a previous support area. Above that, the key resistance to break for the bulls is the recent high around 0.6620. So, what are the potential scenarios? A bearish scenario, which I see as slightly more probable at about 55%, would be triggered by strong US data from the upcoming ADP and ISM reports. This would reinforce the hawkish Fed narrative, strengthen the dollar, and likely push AUDUSD below 0.6530 to test the 0.6500 support zone. A break below 0.6500 would signal a significant bearish continuation. Conversely, a bullish scenario has about a 45% probability. This would require weak US data, reviving hopes for a December Fed cut. In that case, the Aussie's strong domestic fundamentals could take over, pushing the price back above 0.6580 and retesting the 0.6620 resistance. A clean break above 0.6620 could open the door for a move towards 0.6700. Therefore, keep a very close eye on the US economic calendar this week, as it will likely dictate the next major move. The market is balanced on a knife's edge, and this data will likely be the catalyst that pushes it one way or the other. That's our analysis for AUDUSD here on Explain the Charts. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research and due diligence before making any investment decisions.